Hello, I'm Owen Rogers, Director of Product Management at Meridian Global Services. Today I'm going to take you through a demonstration of our VAT add-on solution for sales, where we automate all complex sales across the European Union and further afield into the APAC regions and other global regions. As we go through this webinar, please at any point type any questions that you may have into the chat, and at the end of this, hopefully I'll be able to get to all of those, if not some of those, in the time that we have allotted. So to start, we're here in an SAP ECC box, and what I want to do is bring you directly into the Meridian cockpit. So you can see here we have our own namespace with /MeriVat. This is because the Meridian add-on is an actual ABAP solution directly in our customer's core SAP system. So there's no interfaces, no dealing with outside systems. Everything is directly in the control of our customers within their SAP core system. Going into the cockpit here, you can see there's a number of different tables relating to our modules like sales, purchasing, reporting, etc. Today, we're going to concentrate on the sales, and the place where I'd like to start is with the activation table. So to activate the Meridian solution, we do that dynamically on a sales organization level with the option to also use distribution channel and division where necessary to isolate certain sales that people want to use the Meridian solution for. The key reason for doing this is that we want to make our solution flexible and scalable so that you don't have to have a big bang approach where every transaction in your system is automatically using Meridian. This sales org selection allows you to do a pilot entity, for example, or a number of pilot entities before rolling out the solution in the whole SAP box. One of the benefits of this is that any existing customizing you have, whether that be extended condition records, etc., all of that functionality will still be used for entities and sales organizations where Meridian is not active. So to illustrate that, let me show you how we create the condition records for Meridian within the system. And there's a number of nuances there that are quite different to standard SAP. So if we jump across to the tax condition records here, for sales, we're going to look at our tax condition records that we use for Belgium here. And you'll see when I open the key combinations, the access sequences that we have, there is one for export taxes and one for domestic taxes. Export taxes relates to any sale outside of your jurisdiction. It doesn't mean it has to be an actual export to a non-EU country. And domestic taxes are for any sales within your jurisdiction. Now, these two access sequences sit directly on top of any existing customizing you may have in your system. When the transaction is created, Meridian will check if that sales organization is active for Meridian. If the answer is yes, we will get a condition record from one of these two. But if the answer is no, we will skip these two access sequences and continue on to the standard customizing that's already in your system, meaning that you don't have to tear up any existing customizing you have, start taking out condition records, etc. For any place where Meridian is not active, all of those existing records will be used. So if we look at examples of condition records, as I said, I'll use Belgium here. And if we look at these condition records, you'll see there's quite a few differences from standard SAP. When trying to consider VAT determination, there's really four key aspects that we need to consider. And those four parameters are the departure country. So from a VAT point of view, what's the tax departure country for VAT? What's our destination country? What sort of customer are we selling to? Is there any reason why we should be using a different VAT rule here? This is the customer tax classification in SAP. And also the material tax classification. So are we selling standard rated goods, reduced rate goods, services, etc.? With those four key parameters correctly identified, we are then able to select the correct tax code. And how those four parameters are defined is very rigid in SAP in that it comes directly from master data. With the Meridian solution, we will dynamically determine each of these four characteristics based on the transaction that's being created. One of the simplification rules we have is to use the destination country EU or XX. EU representing countries that are members of the European Union, excuse me, and XX representing countries that are non-EU. So what that does is it reduces the amount of condition records that are necessary to create. For example, if we've got a standard sale to an EU country from Belgium to a standard customer for standard rated goods, our tax code will always be BA. Regardless of the European country, that tax code will be the same. So why create 27 records here when we can just create one? So you can see how that starts to reduce the amount of records you have, considering all of the different complexities that have to be taken into account in Europe. And also non-EU countries. For anyone selling globally, it's very difficult to make sure you have every single country you're selling to mapped to with its own single condition record. So not only does this remove the amount of records that are necessary, it also future-proofs your company so that when you do start selling into those jurisdictions, you've already set the condition records and the rules that need to be followed for those sales. Secondly, the customer tax classification. This is a very key field for Meridian, where we will dynamically determine this as part of each transaction being created. And we will change that for certain tax rules, such as outside the scope of VAT, sales to special regions, triangulation, just for an example of some of the complexities we deal with. And these parameters, this customer tax classification and these letters will only be determined for transactions where all of the underlying rules are met. We'll shortly demonstrate a triangulation scenario where you can see the difference between standard SAP and Meridian here. But every time a transaction is created, we need to consider a number of rules within SAP and the VAT setup for Meridian, but also what types of parameters within that sales order can affect the treatment, such as Incoterms, order reasons, etc., etc. Lastly, the material classification. This is generally taken directly from SAP master data, but there are certain cases where you might need to adjust that material tax classification based on, for example, having a mixed sale of purchases, a mixed sale of services and also goods, where standard SAP will overwrite the whole transaction to goods, even if there's just one small line for, I don't know, maybe spare parts or tools used for a service that was provided. So within the Meridian solutions, we have a way to trigger the whole invoice equal services when that is what the majority of the invoice is for. But as I mentioned, I think the best way to demonstrate this is to look at a triangulation flow. So what I'll first do is I'm going to deactivate the Meridian solution. We'll create the transaction there in standard SAP with no functionality, and then we will recreate the transaction with Meridian active. So I'm just deleting the record for my activation for sales order BE10 here. I'm going to save that and then go directly into creating a transaction. Now, the transaction I want to create is a standard triangulation flow, which would be quite common across large multinational businesses, especially those moving goods throughout Europe. What you'll see here is our selling organization is in Belgium, as we know, BE10, that's our company code. We're selling to our Polish customer, but we're going to source the goods from our intercompany partner in Germany, so a different sales organization. And those goods are going to be delivered directly from Germany to Poland. So with this kind of transaction, we know that in certain circumstances, triangulation simplification can be used for the sale from Belgium. In SAP, to customize this without any functionality such as Meridian's can be very difficult, considering the amount of parameters that need to be taken into account when judging if this should be triangulation or not. So when we create the transaction directly in SAP, I'll be able to show you some of the key areas where it falls down. So again, we're creating the standard sales order here, selling to our Polish customer, selling standard rate Meridian goods. I'm going to use and belonging to my German intercompany partner. Now, when we look at the condition record determined by standard SAP here, we can see there's already some issues with what's been determined. So looking at ZWST, we've hit the export taxes sequence, but unfortunately SAP has determined the wrong departure country for this commercial sale. Based on the slide we looked at, we know the departure country for this sale should be Belgium. The reason Germany is selected here is because standard SAP will only ever take the country of the plant into consideration when determining the departure country. So in this case, it's incorrect to use Germany when the simplification rule for triangulation is available. The destination country is indeed correct here. We're selling goods directly to Poland. But the problem with this is that when we create the intercompany invoice, again, because the plant is in Germany, standard SAP will again use Germany to Poland as the departure destination country, meaning you'll have two transactions for a sale from Germany to Poland. Your intrastat will be incorrect, your EC sales will be incorrect. You'll be reporting two movements of goods when there's only one. So there's lots of things going wrong outside of just the VAT determination. The customer tax class here of 1 is taken directly from master data. Again, there's no wiggle room there with SAP to change that dynamically. It comes directly from master data associated with the customer. And the material tax class standard rate is taken directly from the material records, which in this case is correct. Now, if I go back and reactivate Meridian and create this transaction again, you'll see a lot of key differences. And this is where the flexibility of the Meridian solution really comes into its own and offers a lot of functionality for our customers. So I'm just going to copy this entry and recreate it for BE10. Once I save that record, we can now create that exact same transaction again. One thing to note is that there's no extra parameters for me to fill out or extra for your sales. Everything is exactly the same as it was. Just creating a standard transaction in SAP. Meridian code is kicking in. So now when I click enter, you'll see straight away the condition record has been determined, so there's no performance issues to be concerned about. And if we look at that condition record now, we'll see some key differences. So again, we fit the export taxes sequence. But as you'll see, first of all, the departure country here has been correctly determined as Belgium. Now, the reason for this is that with the Meridian functionality switched on, there is some code that will look at not just the country of the plant being used, but also the ownership of that plant. Does the plant belong to the sales organization making this sale? In this case, the answer is no. So therefore, we consider that this is potentially a three-party flow. Once that's determined, we need to check all of the countries in the flow. So we've got a Belgian selling organization, the plant is in Germany, and our destination country is an EU country, as you see here. So we've updated Poland to EU to make the simplification of the condition records. But because we have these three European countries, it is possible as Party B for us to use the triangulation simplification. And in this case, we've decided that it's correct to do so by updating the customer tax class to a T. Now you'll notice that I didn't change any master data there. So for this customer, the customer tax classification has been determined dynamically, meaning that we're not hard coding into the system, maybe saying, okay, well, look, we know when we sell to this customer in Poland, let's update the customer tax classification to a T. What happens then if they decide to pick up the goods in Germany, or we decide to sell the goods from Belgium rather than from Germany? Triangulation is no longer allowed, and because you've hard coded that master data change, you will always have an incorrect VAT determination. But in this case, we've dynamically determined that. But there's a number of questions that need to be asked by the Meridian solution before we can determine triangulation is allowed. So how that's done is through the cockpit again. If I take you back in here to our sales module, you'll see there's a whole segment here for EU triangular deals. And to select the CTC, the customer tax classification for triangulation, our customers need to put an entry in this table to show that they do want to use triangulation when available in these countries. So you'll see that I've entered T as my customer tax classification for Belgium. So when triangulation is allowed, I want to update the customer tax classification to a T. Now, any tax classification can be used here. It's not hard-coded by Meridian. If that tax classification is already in use for something else in your system, we'll just find another letter that can be used. So there's complete flexibility there. But even though I've decided I want to use triangulation, there's still some more checks we need to do to make sure triangulation is allowed. For example, there are certain rules in Europe that triangulation is only allowed or is not allowed if you are registered in country C. So for example, in this case, as the Belgium entity is Party B, we have to check if they are also registered in country C, which in this case is Poland. In this case, we are, but because of the entries in this table, we know that Belgium still allows triangulation for Party B, even if registered in country C. However, if this was an Austrian selling organization also registered in Poland, this would not be allowed. So the Meridian solution would take that into account and not trigger triangulation. And you can see the reason for that is because Austria is not included in the countries here. This type of table will come pre-populated with the standard rules in Europe as of the time of going live with your company, but it's completely adjustable whenever rules change across the European Union. And in those cases, Meridian will send information either showing how to update the tables yourselves, or indeed any patches that will be needed to be made to the underlying Meridian code. Now, going back to the transaction itself, there's a number of reasons why the triangulation has been determined that we've already discussed. But I mentioned earlier that there's quite a lot of parameters to consider in a sales order when actually doing the VAT determination. And this is the reason why customizing is quite difficult. So if, for example, we think for this triangulation flow, what would happen if our customer decides to pick up the goods themselves? So maybe they determine that they want to pick up the goods themselves in Germany and be responsible for importing those goods into Poland. That totally changes the dynamic of the transaction. And in that case, triangulation is no longer allowed. What we have found with our customer base is the key way to indicate that a customer pickup is occurring is by using the Incoterms. So within the Meridian solution, we now take these Incoterms into account when determining our triangulation. So as I mentioned, if it's a customer pickup where we expect the customer is going to pick up the goods themselves, we need to set a rule in the system as to how to recognize customer pickups are occurring. I mentioned already that we use the Incoterms parameter. So as you can see here, the Incoterms identified by Meridian to indicate customer pickups would be XWorks or FCA. But for some of our customers, it's not always possible to rely on the master data of Incoterms, and they have other indicators such as route, shipping conditions, countries, exclude certain ship tos. They can make a different determination on what in their system indicates a customer pickup. Again, flexibility is key here because not all customers will have the same system, but generally the Incoterms is a good indicator. And once we've identified what indicates a customer pickup, we then have to decide how do we treat that customer pickup. So in VAT terms, when a customer picks up the goods in your location, Generally, you need to charge local VAT because you don't have any documentation to show that customers have actually taken those goods outside of the jurisdiction. However, once you build up a long-term relationship with a customer, you don't need to always have to be provided with the export documentation and then have to go through the trouble of creating credit notes and new invoices where you remove the local VAT charged and use the EU simplification. So with our solution, what we've built based on our customers' needs is a way to allow you to decide a default position, whether you want to trust or not trust that the customers are going to move the goods on without having to provide export documentation in advance of the VAT treatment. So as you can see here from my sales organization, I say that all customers are trusted. So let me change that and make the save, and we'll see how that affects the treatment of the sales order. Once we make this default decision, we do have tables which allow you to enter exceptions to that default. So if we say that all customers are not trusted to provide that documentation and we want to charge local VAT, we can put in exceptional customers here that go against that rule for both trusted and not trusted. So again, once you have a built up relationship with a certain customer over a long period of time where documentation is always provided, it's probably easier just to add those to that list that says they are trusted and you don't need to charge that local VAT at source. But in the case here that we're discussing, I have set my rule to say that customers are not trusted and I want to charge that local VAT. So when I update these Incoterms, again, this might be done automatically by sales staff or it might be part of your master data. But once Xworks appears on this sales order, we need to consider that in the code. So as I've changed that, now you'll see some key changes in the condition record that's been determined. If we go back to the analysis, we'll see that in the condition record, we're no longer using the export taxes sequence. And that's because I have said in the system, when the customer is picking up the goods, I'm not sure the correct documentation will be provided to show those goods have been brought to Poland. So I want to charge local VAT in the commercial sale. Meridian has then checked that this selling organization is in fact registered in Germany, which it is. So local VAT is being charged. This check on the registration is key because in certain cases, if you set these rules, you don't want to start making sales in jurisdictions where you're not registered. And in those cases, Meridian will block the sales orders with an incompletion log to let your sales order staffs know that you can't make sales in this jurisdiction for this selling organization. And that means that no incorrect billing documents will be created unnecessarily. So that's just one example of a type of parameter that would have an effect on the VAT treatment. And hopefully that's clear by the example we've used. There is, of course, other things like the order reason, for example, some customers use in order to help with their determination. Lots of different things related to bidding blocks, etc. But as you can see, if we go back into the VAT cockpit, we have a number of tables that cover all of the different complexities related to sales for VAT within Europe and even further afield. Things like extended and domestic reverse charge, extended reverse charge being the rules related to sales of non-established companies in local jurisdictions where the buyer is then responsible for the input and output VAT. And what we call domestic reverse charge would be based on the types of materials where reverse charge is necessary, like, for example, in the UK, mobile phones and scrap metals. And we do allow you to set thresholds for those types of sales. Other things to be considered are default services. When selling default services means that we must invoice the VAT number of the established company when making the sale rather than the place of supply. Things like distance selling, other exemption rules would include out-of-scope transactions, VAT group sales, and exemption certificates, where we will track the amount of sales under an exemption certificate where there is a rule as to the threshold that can be breached in that certificate period, like the plafond. But there really is every type of complexity imaginable for VAT covered by the Meridian solution within these tables. And these tables will all be set with the correct rules for your company based on a review of your business flows by the Meridian team during the implementation phase. And after go live, there's very little reason to have to change these tables, unless, of course, as I mentioned earlier, Meridian release a patch related to changes in wholesale VAT laws or regulations. Or if you maybe have a merger or acquisition and want to go live in a new jurisdiction, there may be some table changes needed there. In all cases, Meridian will support through our Jira service desk, and customers are never left alone to figure out the tables themselves. So thank you for the time listening to this conversation. Any questions that have been asked, I won't be able to answer directly now, but I've taken a note of those. I will be able to reach out after this, and if we need to have a follow-up call, or indeed I can answer your questions via email, I will do so. Thank you very much.